Right, good evening to everyone. I'll just take off the fibs until we do the analysis so that we don't have too much cluttering on the charts and are able to envision exactly what we need to do. Okay, so we're starting with Ethereum. First we have, this is the updated actually until today. This is an updated daily chart. This is today. All right, this is a daily chart. This is what's happening right now today. What's important about this chart, what we really have to note about it, is that we have reached 61.8% fib channel of this, what we expect is the Elliott uptrending channel. All right, you're having this channel. This channel is based on what we would call a cycle translation axis. A cycle translation axis is when you join the top of a higher degree one with an internal degree one. If you draw this line backwards, you find that it does avoid the spikes, but it would align with the candle body of that top of one and the spike in the first internal wave one. This is a cycle translation axis, and out of which you can actually implement the use of a growth channel. Okay, so far the market has not fallen. All right, so far the market has not fallen below the 38.2% of that channel. The market's now contesting 61.8%. We expect rejection actually, so it's very good that we would take profits now. We don't want to delay. We will now look at what to expect in the current cycle structure and where we expect our next entry to be. So the most important thing about this chart is two things. We would want to take profits now because we are at 61.8% fib. There's going to be a correction, and we're still about to do wave 5. This wave 5 is a bit projected too high here. We only expected to try and test below this level 1. We'll have more detail on the 4-hour charts. This is of course now today's 4-hour charts. We're looking at this Elliott channel that we're moving in, this green Elliott channel. All right, this is very important to note because the market is currently at 50% of that channel, this dashed center line. Okay, so of course you would expect a rejection here. All right, we're seeing now a complete inverted head and shoulders. Okay, so the last time we had this inverted head and shoulders was at the lower base of that channel. All right, and the breakout took us to 261.8%. So if this is a 1, 2, or this is the lower cycle, the higher cycle is 261.8% greater than this lower cycle. We expect the same should happen this time around. That is the same lower cycle. Remember that we are bouncing at a zero line rejection, a zero line bounce on the 4-hour chart. We treated this earlier and we said there was an important opportunity here. So this bounce should take you to 261.8% of this wave. All right, this wave on the 1-hour chart actually starts here, 1, 2, not at the neckline. So if you measure 261.8, you will go as far actually as maybe 4,400. We're only using 200% targets. This one here, 4,250, would be our ultimate target for wave 5. We would want to just keep that in focus so that we understand what the market is going to top. Okay, so related to the last cycle, it did 261.8%. This cycle at least should do 200 if we're going to be planning to take profits on the longer term. They cannot pass 200%. We're looking at 4,250, this level up here. Okay, so now let's look at the cycle structure itself. This is the most important for our trading. This is the market action just a while back. Okay, so the most important also again thing to note is the momentum on the 4-hour chart. This kind of momentum here signals that wave 1 is about to end. Wave higher degree, wave 1 in white here is about to end, is about to complete. Naturally it should complete at 50%. It still have a leg 5 to do. All right, yes it does. Okay, so did 3 we will know if this is really true or not when we look at the 15-minute chart. We'll look at that very shortly. If it's of course positive, momentum is positive, then we know that we're still going to be doing a level 5. If momentum has began to show negativity on the 15 minutes, then the market has stopped and wave 1 here in white is finished. All right, but currently we're still having bullish momentum. All right, so we still have a level 5 to do. We expect that level 5 just to try and spike below that neckline. You're looking at 3,730, 3,740. This is your top out level. At that point, you will have finished wave 1. For those of us who are more familiar with an Elliott structure, of course, this wave 1 is composed of 5 internal swings, shown here 1, 2, 3, 4, 5. A correction in wave 1, all right, will take you down to the bottom of wave 2 in white here. You have here white and white, you have wave 2 in white, okay? So the important swing trade to do, the very important swing trade to do, all right, is to buy. We would want to buy half of our planned size, just below 50% of that Elliott structure. Okay, we call this that we are buying upfront. All right, even though we would know we could get lower levels all the way down to wave 2, we would want to buy upfront because the market could break out higher. It doesn't have to be very technical, it does not have to be very academic. Okay, it is a fundamental market, it's bullishly fundamental, so we always want to be in the money. So any correction lower, all right, currently we are in wave 3. A correction lower would actually be a wave 4, that yellow 4 here. It doesn't have to go all the way down to the top of wave 1. All right, this is too theoretical. That wave 4, this is a 3, that wave 4 will just bounce off that neckline. So you want to have an entry as close to that neckline as possible for half your size. Okay, so that wave 4 could give you an extension, and we could go into an iron wave structure all the way up to 3,800, the market top 3,900. There is a probability, there is a chance. It may not happen at all, but if it does happen, we will be very upset because we're not in the money, we are not in the market. That's why we're buying half of our size there, up front there, at the neckline. All right, so if this does a wave 5 all the way to 3,700, and we find we're getting, after buying half of our size, we are getting negative momentum in the 15 minutes at 3,700. Okay, then we close out that long, and we know that level 1 is finished. We're doing now level 2. There's going to be a wave 4 correction below 50% yellow fib channel, and of course above the channel line itself, maybe somewhere in between. All right, ideally we would expect that we're going to bounce at the top of level 1 here, the top of wave 1 here. This C here is actually a wave 1, definitely, because you have a level 1 very close to it, and it is labeled C, but it does count as a 1, 2, 3, 4, 1. So this is the lower level 1. We could have taken the neckline lower, and you would have a lower degree level 1 incorporated with the internal level 1. So this is level 1. So if you have finished wave 1, all right, or 5 into wave 1, okay, this 5 in yellow here, you would retract all the way to the top of 1 in principle again. This gives you an entry of around 3,400. Over here it's showing at 3,393, maybe 3,400. In order to make sure that we are filled, you're looking at above that top of C, 3,461, 3,470. To be really sure, you would want to have half of your size entry there, okay, or your full size entry there if you have already closed out at profit at 3,700. So in strategy, what we will do, we know that we are now about to do a correction 4. Correction 4 should take us down to this neckline. We will try to buy as close to that neckline as possible. We're looking at 3,570. Okay, we buy half size at 3,570. We have to be prepared for all scenarios. Okay, so let's now focus on what could happen. After buying that 3,570, the market goes up all the way to 3,730. Okay, we hold. We know this is the market top, but we hold just in case there's a breakout higher. All right, once we get to see negative momentum on the 15-minute chart, we close out, take profits. Probably the market is going to be doing a degree 2 in white here, all the way to this level, 3,393. We buy at 3,470. There could be spikes to 3,400, but we want to be again in the money. There may not be spikes, okay, and therefore we would want just to enter here at 3,470. Okay, at that point, this is wave 2. We're going up to wave 3. Wave 3 will take us to the next neckline altogether. Next neckline, either the market top or just below this zone, 3,898, 3,900. At that point, this is wave 3. There's going to be a very deep correction in wave 4, supported by that 50% fib channel. We go up into wave 5. We're looking for that target that we talked about on the daily, that we talked about just a while back, this one here. That is 261.8% related to the last cycle. Now this is our new last cycle, so this target becomes top of wave 5. We're looking at 4,250. Okay, so this is of course a long projection. What we need to focus on now is making the entries themselves. Making the entries themselves entail that we want to be filled. First entry 3,550, roughly 3/4 of a coin. If we are not really correct, the market goes down immediately. We want to add another 1 1/4 of a coin, 3,450 or 3,460. Our stop is right at that red arrow, 3,300. Of course, our stop is below level 2. It's as simple as that. 3,300. This is level 1, 2. This is 2. We are right here, 3,302. Okay, so this is about 400 coins, $400 for 2 coins. It's $200 per coin. By that point, we could be holding 2 coins. We're going, of course, for our most immediate target is going to be again top of 1, level 5 here, and this is 3,750. If we had bought 2 itself, we know that we're going for 3,900 and not 3,750. So we're looking at $500, we were looking at $700 for these 2 coins, or maybe even 750 or 800. Let's take a look now at trade management itself. Current immediate trade management on the 1 hour chart.